Welcome to Investors Insight. Today's topic is the U.S. focus on President's Day. So happy President's Day holiday to everyone out there. Last week we talked about the Far East focus, the focus on the China trade talks, and in South Korea. This week we want to bring it back home and talk about presidential politics. And so Ashley, take that away.
Yeah, the interesting thing is the third year of a presidential cycle that we're in now in 2019 is historically the best year for markets. And you can go back, that's happened for years and years. So it'll be interesting to see on President's Day if indeed we get a better market in the cycle,
right.
Because it's. But Trey had some interesting points.
I think typically you see that because we're past the midterm elections, the presidential elections haven't started yet, so everyone kind of are acting like adults. You get more compromise, you get more spending. The market loves more government spending, so you see a positive year. This cycle may be a little different just because typically we don't have so many people running for president at this point in a third year of election cycle. I usually waits till late in the year or starting in the fourth year of election cycle. So it'll be interesting to see how markets react. Also, we had a down second year in a presidential cycle, which also doesn't typically happen. So hopefully we may be better than expected to Ashley's point, something we're watching.
Yeah, Trey, talk about the volatility in oil prices we've seen.
Yeah, I mean, talk about how presidents can impact the markets. So the three main presidents we're focusing on is the president, quote unquote, really of Russia, Vladimir Putin, the king of Saudi Arabia, and then our president. Those are the three biggest oil producers, and the disagreements and agreements between those three has really riled the oil markets. Starting last year, we saw oil prices jump up 20+% on the Iranian sanctions. What happened is then Russia started increasing their production to counter that, and we saw prices drop 40%. Now, starting this year, Venezuelan sanctions, we're seeing prices jump up another 20+%. So these huge swings are probably going to be the norm, largely because so much of the global production is now built in those three producers. The U.S. is now a swing producer with shale. Russia and Saudi Arabia now are in an agreement. Russia's never been a part of OPEC, but now they've kind of come into the fold to say, hey, let's cut together or raise together. So that leaves a lot of capacity that can go up or down just on one or two meetings. And so you're seeing these enormous swings. So enjoy the down swings at the pump and maybe kind of hold off on refilling the gas tank when you see the price go up because it's probably not going to last.
Yeah, and we follow that because consumer spending is 70% of our GDP. Oil prices impact consumer spending. So
tens of billions of dollars per penny in the price of gas. So it really affects the stock market, affects consumer sentiment. We saw last year when the price of gas started shooting up, we saw consumer sentiment middle of the year start to come down. Then when gas prices fell, consumer sentiment rises. It's really, it's a day-to-day acknowledgement to people's bottom line.
It's the main place they see it.
Yeah.
You actually see it.
Yeah, you don't notice the change in the price of asparagus every day, but when you're driving to and from work, I see a dozen price points on gas. It's something you can immediately take note of.
Yeah, and then Adam, we're winding down earnings season. Talk about that.
Yeah, we talked about the Fed and U.S. trade talks. Well, there's another historic component right there that we're kind of overlooking. It's earnings. The expected earnings growth rate, I'm going to say that again, expected earnings growth rate was 7% last year in September. It's gone down on average this month to 0.8%. So it's a huge drop. Now, the positive sign of this that we could see potentially come out is that companies start to beat these expected earnings. So this would be really good for the economy and a good boost if that happens.
Yeah, usually the stock market prices in the expectations, and the key is where you get the upside is if companies start beating consistently, then there's the upside surprise, and we may see a good rally off that. It sounds bad that when you hear it's a good thing to see estimates come down, because we're still growing. They're not saying we're shrinking. Those estimates are coming down. It makes it a little easier for companies to beat, and so we may see some positive market action out of that.
Yeah, most definitely.
Yeah, so a lot going on. Again, happy President's Day. Call us. We love to hear from you. Have a great week. Thanks.